Hello everyone. Okay, so today we'll talk about wave analysis. How do we use it, what we use it for, and what I use it for. So I use it for framing the context of the market, of the price action. And why do I do this? To get a sense of understanding of what's happening in the market, so that I can take advantage of price movements and make a profit. Okay then, we will dive right into it. We want to use the higher time frame to frame the context of the lower time frames. This is why you start from the higher time frames and work your way down. You do this because you will have a higher probability of success if you align the higher time frames with the lower ones. Okay, this will give you much better trading opportunities and risk reward trades. And why is this so? It's because of the fractal nature of the markets. It's because the markets creates pattern within patterns. Let's take a look at this right here. So the market moves in impulses and corrections. This is like the basic understanding of Elliott wave analysis or wave analysis, that the market makes an impulse. Market makes an impulse, a correction, another impulse, correction, impulse, correction, impulse, correction, impulse, correction, and it moves like this constantly. And take a look at this here. So what do I mean by the fractal nature of the markets? That the market has different degrees of patterns and structures. Look right here, this is an impulse, a correction, and an impulse on a higher degree. But inside this higher degree there are multiple of impulses and corrections, and this is how you can take advantage of multiple time frame analysis, because if you have a higher degree of structure, like this one here, you have an impulse here followed by this correction or this pullback, you can then look for trades to go up, because you look for in this case you look for trend continuation trades, because you have an uptrend here and a pullback. And then on lower degrees you would be able to find, for example, this bullish structure here, an impulse and a correction. Okay, so this is the concept of patterns within patterns, and how utilizing multiple time frame analysis is very advantageous for you as a trader. Okay then, let's dive right into the charts and take a look at how you can analyze these impulses and corrections, and how your approach should be to analyzing these impulses and corrections. So let's take a look at EURUSD, and we'll just look at a lot of different charts today. I always start on weekly or the daily. It depends on the chart and how much information there is. So the first thing you would want to do is look for the high and the low of this whole structure. The high and the low gives you an idea of where the impulse is. So this is the first impulse going up right here, followed by all of this, which is a correction. Okay, and this is, remember, on the weekly chart. So we are just analyzing and we are just getting an understanding of the context of the market. So based on this information and based on us knowing wave analysis, we will then look for another impulse, right? Impulse, correction, impulse. Whether this will happen or not is not important right now, because we are just setting up a scenario, a way to understand what's happening, so it makes sense for us. So with this information, I then take a look. Okay then, so if we have a correction here, is this correction finished, right? Is this the end of the correction? Are we going up or are we not going up? Then I look for the low. of this correction. So where is the lowest point? It's here. Okay then. So now I suddenly have a bit more information. I now know that okay, if this is the low, then I know that this here could be the correction here. Something like this. Which would mean that this could be the end of the correction. I don't know. We could be going up now. And this here is an impulse, some kind of complex three-wave correction, followed by another impulse. But take a look at most recent price action over here. It's actually looking bullish right now. This could be an expanding flat. A contracting flat, right? I don't know right now in this moment of time, but that's the analysis it's pointing towards. This possibly being a contracted flat, which would mean that the next move is going up. And based on this impulse, possible three-wave correction, another impulse up, it's very likely that this is some kind of flat. So if this is my analysis right now, I would then go to lower time frames to get a better understanding of what's happening here. Because just because the analysis is pointing towards the possibility that the market is going to go up, you know, it doesn't mean that I'm going to be right. It just means that that's how I frame the context. That's what the market is telling me right now. So let's take a look at the daily. Okay, the daily chart. On the daily we see that we have this leg here and we are coming down. We're still in a downtrend, right? The daily is still in a downtrend. So we are not yet going up, because this here could push up or come down, or it could break out, make a correction and continue up and give us that uptrend that we're looking for, based on the higher time frame analysis. Because look at this, it looks very bullish, right? It looks like a bullish structure. Let's do this. And let's go down to the 4 hour. Yeah, this looks like it's a complex flat actually, but looks very bullish at the moment. So I would look for buys here based on the information that I have. But let's go back to the daily, and I just want to emphasize an important point, because I think many people, they get married to an idea, or they don't really understand that the market is not static, it's dynamic, it's in constant movement. New data is coming in, and because of that you have to adapt, and you have to understand that you cannot just take a trade and then, you know, pray that it goes and oh, it has to work because the analysis is telling me so. That's not how it works, guys. So look at this, everything looks bullish, and even the daily chart looks bullish, the 4 hour. If you could have, like, there have been very many buying opportunities, right? But even if this doesn't go as you or we have planned based on our analysis, let's say the market just goes up to here and it starts reversing, this was still a good trade. Like, based on all the information, you could have traded this up to this point and still made a lot of money. Just because the trade reverses does not mean that, you know, the analysis is wrong. Because if you go back to the weekly, what did I say, right? Before, when we talked about the daily chart, it was still in a downtrend. So this means that market could come lower. Let's say that market comes down to this level. Well, and starts reversing from here. This pattern would still be a contracting flat. Let's say that the pattern comes, continues lower, lower. It could come down here and go down to this low, right? Even break it and then start going up. Now we suddenly have a regular flat. Okay, so analysis is one thing. Okay, like take a look. You have your analysis. This is where you frame the context of the market. But you have to understand that you cannot trade based only of this information here. It's not enough. You also need to understand the strength of the market, right? The current strength of the market. So you have to understand the intraday conditions or strength of the market. So what do I mean by that? And you start analyzing, you start framing the context, then you take a look at the market. Is the market aligning with your analysis, with what your analysis is telling you? If it is, and the market is actually, let's say you're looking for a trend continuation. In this example here, right? We're looking for our analysis is, let's just there. We have a possible contracting flat. We go to the daily. We see that we have bullish structure, so we could break out into a uptrend. But in this moment of time, the intraday strength, right? It's still bearish on the daily. So we have that in mind, and we know that we could just come up here and continue down, which is why we take trades based on that understanding. So we protect our capital by moving stops and making sure that we are in profit, or we take some profit off, because markets can be random and can move erratically, okay? So the next thing is, where is my drawing? Where is my drawing? There. Next thing is, so after we have an analysis and we have framed the context, we then look at the intraday strength of the market, where we look at the conditions, if the market is aligned with our analysis. If this is so, then we can start looking for an entry. An entry is defined by different variables, defined by confluence, right? Weight of the evidence. And an entry can be like, the way we define an entry is specific to our own strategy. Let's take a look at this, just to give you guys some examples of possible, like, how you would enter this market, because this is quite messy. I'm on the 1 hour right now because you would want to enter on lower time frames because of the risk reward opportunities, right? So take a look. We have a lot of wicks here. If I was looking at this data here, the first thing that pops into my eyes, right, is this flat. I'm just seeing that we have a possible entry here. But tools, VWAP, the open, that's today. Let's go back. Actually, I wanna erase some data just so it makes a bit sense. For example, let's just take this flat as an example for now. So we see that we have the open was here, right? We pushed up, came down, came up, came down, beautiful little flat. Then it dived deep down, right? And we're wondering, okay, what's happening? So this is where you have to learn how to read the market and what's happening intraday. So let's play this out. The moment I see that we came down, when this trading day started, we came down from the open, but we quickly started to gain position above the VWAP, and look at how VWAP is starting to trend up. Not only that, when we came up here to retest the open of the day, I would be watching this point and I would be assessing whether there is strength or weakness, because if we start breaking like this is obviously a sign that there are a lot of buying pressure intraday. Not only did we just fly past the VWAP, but also the open. So you can use a lot of different tools, and in this way you want to build your analysis, your trade idea. You want like a layered complexity to it, so you don't take trades based on some random pattern that you saw, right? You take trades based on an intelligent assessment of the variables that you see in front of you. And by using this higher time frame analysis form, you will really gain a much better understanding of what's happening. So okay, let's look at some different charts, right? I said in the beginning that I would cover some different charts. So let's just take a look at this one, pound USD. Again, weekly, I think weekly is good here. Yeah, so again, I would look for impulses and corrections, right? And look at this chart. We see that we have an impulse, correction, impulse, and this can be a few things here. So let's take a deeper look at what it might be. First, we have a high point here, and where's our low? It's actually this point here. This is why I just said that this can be a few different scenarios, pattern scenarios or structural scenarios, because if we take a look at the patterns that can unfold here, we have right now two scenarios. Let me see. Yeah, we didn't break that one, so this could come down here and give us a running flat scenario, or it could come up and break this top and then come down and give us an expanding flat scenario. But there's also a third scenario based on the bigger structure that I see right now. When you look at this, it looks like it could be some kind of three-wave structure, right? Take a look. Impulse, correction, impulse, and this is a smaller degree, right? Here, take a look. When you look at patterns, there are many different outcomes and scenarios. Let's just take this, let's put it down here. This could be the first impulse of something larger, right? I'm not sure if this is coming from below, but looking at this, I'm assuming that we have an impulse, correction, a possible impulse going up, because the structure here could actually be, we could have, look, an expanding flat, a contracting flat in here, because this looks very sharp. So this could be the last impulse going down. And if this is the case, then I would definitely look for buy opportunities on lower time frames. I would go to the daily. Yeah, we are in uptrend right now. We're pulling back. So the question is, when will this pullback end? Will we go lower? Will we start going up, and then maybe come down and give us a three-wave correction and then go up? Like, we don't know. But what we do know is that we have an uptrend, we have a quite possible pullback. So we would look for places where the price can turn and go up, and then we would take a buy setup, because that's the information we have. And we would then manage that buy setup. You will, like, a big part of trading is when you are in a position, you have to manage it based on the information that you get from the chart, right? Let's say that we bought this here, okay? Structure is going up, up, up. We're super happy. And we're super happy because look at this structure. We're looking at it, we're thinking 1, 2, 3, another impulse going up. I will make so much money. And you know, your emotions are flying high and yada yada. Like, I'm already in the buy. Look at how it's going up. Yeah, if you're thinking like that and you're feeling like that, then you have already lost. Like, because you always have to stay cool, and you have to know that this trade here can end up in a loss because the market could do this. Okay? And this is where the trouble begins. If you have not taken any profit because you thought your bias was that the market would just go up. And that's a big problem, because you always have to protect yourself, protect your capital. You need strategies in place that ensure that you get profit. So you need some kind of tactic that, you know, you take off some profit at this point, or you take off some profit here, and then you can always, if the price or if the structure breaks out and starts correcting, then you can always look for another trade to go up. But you have no idea whether this will happen or not. The price could as easily, as I said, go down. And then, because you were so biased and you thought that the price would just continue up, you did not get any profit, because the price came right down to where you entered and then reversed. So this lesson was a bit more a bit different than what I had anticipated, but I think it's good to talk about these concepts and these scenarios, because you have to understand that there are different layers to trading. You have to analyze your chart, then you have to look at what's actually happening intraday, and then you can look for entry points, like where do you want to enter based on different variables. And then when you are in the trade, you have to manage it, right? You have to know where you will take profit, when you will take profit. Will you take profit in stages? What will you do when the price reaches a new level, a key level? Where are the key levels, right? Where can the market react, and where can it possibly turn from? So there are a lot of things that you have to take into consideration. You cannot just see something on the chart, then click enter, and then expect, you know, to make money. That doesn't work on the long run. If you want longevity, if you want a long, healthy trading career, then you have to put in the work, and you have to understand that there's so much more to trading than what, you know, all the information out there is telling you. Okay, I think that this was a little rant, and I'm gonna end it here, but I'm quite passionate about trading, and when I get started, I just keep on talking about it, because I really want people to understand what trading is and what it isn't, okay? So, yeah, I'm gonna end it here. So thank you guys for watching, and trade with care, okay? Bye bye.